I want to do it the correct way, all right? Because a lot of you guys, you get most of it right, and then you do mess up on some things, which is why I want to take my time and do this class. All right, everybody? Sound good? You guys can't see the screen. Hold on. Can everyone see the screen? Let me just see in the Q&A chat real quick. No. Okay, give me a second. Let me flip over to here. Can you guys see this now? Let me just see. Okay, cool, guys. Alrighty, so let's get directly into the masterclass. So what we will do is, again, we'll be covering everything. I don't have questions and all set up right now because I want to cover everything properly. And then I don't want to take like every 2 seconds to answer questions. So we'll do it at the end. All right, everybody. So let's go ahead and take a look at everything. And again, questions will be coming later on. All right. So first thing, I know a lot of you guys are familiar with me, but kind of give you guys a little bit of background on how I trade, all right, and when I started trading and all that stuff. So I did start trading in 2018, all right, so late 2018. And I didn't really do much. Like the way I started trading was I was just using like these random strategies, right? Someone had taught me a strategy, thought I understood it. It was just like a basic breakout strategy, and I really didn't understand like what the hell was going on, right? So essentially, it was basically just like doing whatever I can. And a lot of people are in that same situation where you just take whatever trade, no exact edge, whatever you feel like the market's going to do, that's what you're going to do. And that's a very big mistake, right? So as a result, I spent my first 2 years of trading as just straight losses. I didn't even get like any green months at all. And I had my first green month in 2020. So that was during the COVID era when everything was like pumping, it was solid. And my initial start was on penny stocks. All right. So essentially, 2018 to 2020 was just kind of like a learning phase, which I will tell you guys right now, majority of traders will go through that learning phase. Okay. Nobody can really skip past that. It's going to be something that you have to kind of unfortunately go through. Makes sense. And I also went through that exact same phase. Okay. I ended up taking pretty decent losses, about almost 15K, I want to say, which was, now in hindsight, it's not that crazy, but at the time it was kind of crazy. All right. So from 2020 to 2023, I traded penny stocks. That was my main thing, as a lot of you guys maybe followed me back then. I was a penny stocks trader, and it was pretty decent runs. We were running up crazy numbers. Penny stocks were hot. Every single day was insane. All right. And then as that kind of started to slow down, obviously penny stocks move kind of like as a cycle. And I got into options. Okay. And that was like a whole new world to me. I didn't really understand options that well until I started trading it and got everything like a little bit clear. But eventually, here we are. We've been trading options since 2023. Everything's been amazing. All right. And my main focus that I want to say is I don't want people to just trade. A lot of you guys might have a system, but you don't follow it, right? You guys take a look at a trade and you just do absolutely nothing, right? Like you understand what needs to be done, and then the market opens up and you're just taking an absolute mess of a trade. All right. So today I trade options consistently. I mean, some months are larger, some are smaller, but we fall around the range of 25 to 40K. So it's not anything absurd, but that's kind of where we're at with my trading journey. All right. Some of the more interesting things is I want to kind of show you guys this is our last challenge account that we did. So I want to show you guys a lot of people are asking me, what strategy do you use? Did you trade it on a small account differently? No, it's all the same. So if you guys have a small account, you have a prop firm account, it doesn't matter. All right, realistically, you can trade on a small account. Everything is pretty much the same, just different sizing. Is everyone clear on this? So I ran up, this is last year's things. We did a 5K to 83K account, and then we did 10K to 118K, which was pretty solid. Pretty solid numbers. So again, small account works, large account works, prop firm works, crypto, forex, whatever you want to trade, all good to go. All right. So let's go into what we're going to be talking about today. All right. We will take a look at my concepts, my strategy. We will take a look at some live trade examples and then risk management, which is key. This is where a lot of people do struggle. All right. Profitability. So that's going to come first, obviously, before you can scale to 10K a month, 20K, 30K a month. And what's causing your actual losses in trading. All right. So we're going to cover all that. And then we'll take a look at some of the members in the Discord that I've actually implemented it. I want you guys to just kind of see, it's easy to say it, but I want you guys to see it in action. So you guys could even go back afterwards, tag them in the chat and ask them, hey, how did you do this? Get some more insight. All right. It will be helpful for you guys. Cool. So we'll take a look at everything. So let's get started with the first thing of this session. All right. I have four main concepts. All right. Number one is going to be liquidity sweep. So this is basically just understanding where the market's highs and lows are. All right, nothing else. It's just understanding, okay, we have highs and lows at on the hourly time frame, where they're going to be, where price might reverse, and where price has room to. And we'll cover all of that. Don't worry, okay? Break of structure. This is key. This is where I want to really focus because this is one of my main strategies. You guys know I have two strategies. 99% of my trades are taken, however, with the break of structure fair value gap, right? So what is a break of structure in essence? A break of structure is just simply a breakout, a continuation, all right? So in this sense, you would mark out highs, you would mark out lows, all right? And when price breaks that level, that is what we consider a break of structure, all right? Does this apply to all highs and lows? Essentially, yes, but for the way we trade, it's going to be for the high of day and low of day only. So essentially, the highest point that price hit and the lowest point that price hit after 9:30 a.m. Eastern time. All right. Now, fair value gaps. This is another very important part of what I trade. The way this one works is you will take a look at any three candle sequence, guys. All right. If there is a space between the high of the first middle candle and the last candle right here, okay, this is a fair value gap. Is everyone clear on that? So in this case, is this a fair value gap? Let's take a look. The highs right here, the lows right here. There is a space they're not touching, so that is a fair value gap. Everyone clear on this? Okay. So essentially, basically, if you do take a look right here, for example, you have the high and the low's right here, and then your highs all the way up here. So that is not a fair value gap. That is not something of interest to me. All right. So everyone clear on that? Let me just see in the Q&A chat real quick. I want to make sure everyone's following along before we do continue. Will the recording be posted somewhere? Yes, it will be. All right. Let me just see in the chat real quick. Everyone's following along. Cool. Perfect. Yes, and the fair value gap will only be after the break of structure. I don't care if it's all the way down like here. It means genuinely nothing to me. It has to be in this exact order, and we'll take a look at that on my strategy. All right. So the last thing is price action, which is one of the more advanced concepts, and this is genuinely really, really important. I want everyone to understand that because price action really covers everything. Okay. How price is reacting to levels, how price is acting on breakouts, how price is acting as an overall trend. And we'll take a look at all that and we'll understand everything clearly. All right. Perfect, guys. So let's move on to our next slide now. So for a liquidity sweep, what you guys will do is you will go on the 1 through 4 hour time frame. All right. And you will just mark out any area where price had a strong reversal. So in this situation, got a nice little uptrend, strong reversal, mark out the last candle before that reversal happened, including the wick. All right. Nice little rejection. Price gets a reversal. Mark out the last candle before price gets that level right there. Okay, that reversal. Again, same exact idea. Now, the way these liquidity sweeps will work, every time price comes and takes out these levels, we expect reversals off of them. So what am I doing with these levels? I am essentially going to just basically use that as my target and also understanding where price can reverse. Okay? Is everyone clear on that? So liquidity sweeps will just be key highs and lows on the 1 through 4 hour time frame. I stick on the 1 hour in most cases, but they will give you every single thing you need for direction, where price will reverse, all these different things. All right. Are you going to go through your indicators? I do not use any indicators, guys. I trade direct price action, absolutely no indicators. All right. All right, everybody. So everyone clear so far on how liquidity sweeps work. You'll wait for price to break the level. You'll look for price to immediately reverse after breaking the level. And then once candle closes, that is considered a sweep. And that is where we expect price will reverse to the opposite end of liquidity. Alrighty. Perfect. Perfect, guys. So let's go ahead and take a look at some more things here. All right. Let's move into that. So another example of liquidity sweeps is essentially like this. You have a key low, price comes and takes it out, immediately reverses. So that is going to be a sweep. What happens when price comes and takes it out and doesn't reverse? That is a break of structure. You cannot predict this. There is absolutely no way to predict in the market, okay? It's going to be very simply react. If it comes and takes out that high, I react to that, all right? I don't rush into the trade and just be like, oh, well, we just took out a high, it's going to get a sweep. No, you'll get destroyed that way. You will wait, you will see how price does after that sweep or the breakout, and you will figure out what it's going to do, all right? Is everyone clear on this? Just make sure. Perfect. Awesome. I'm just going to ask you guys in chat a few times after we cover a concept to make sure everyone is going on that. Yes, this class will be recorded and we will cover, guys, everything. Trust me, time frames and all that we will cover in a second, okay? So don't worry, we're going to cover everything. just the beginning of the class. All right. Do you wait for the retest? Again, we will cover that in a second, guys. So all your questions will be answered. All right. My main goal is by the end of this, you guys should have no questions at all. All right. That's how it should be. Perfect, guys. So let's move on to our next example. Once again, you can use this on the lower time frame, but I don't like doing that. And the reason is because the lower time frame has a lot of highs and lows that fake out, right? Some people do it. I personally don't. But to give you an example of how that works, you can essentially use it on the 1 minute time frame, for example, if you want to. I don't like it. Everyone clear? All right. So that's the way it works. I don't really focus on the lower time frames because for liquidity sweeps, it's not going to give you much. Is everyone clear on this? All right. Cool. So let's continue into a few more things. Break of structure. So what is a break of structure? Everyone clear on this? We have break of structure when it's the exact opposite of a liquidity sweep. All right. So if we get a breakout and price holds, it doesn't just immediately reverse right back down. That is a break of structure. So in this case, instead of expecting price to reverse, we will look for price to continue. Is that clear? So candle will close. It will tell us if it closes below, if it closes above. All right. It all depends on that. It all depends on what we will do with that level. All right. If it breaks and it holds, great. That's a break of structure. We look for a fair value gap setup. If it breaks and it immediately drops back down, that is a liquidity sweep. And that is where price will get a reversal to the next level of liquidity. All right. What's the best time frame to use liquidity sweeps? Again, it is going to be the 1 through 4 hour time frame. All right. That is a higher time frame setup right here. So let's take a look at some examples of break of structure. So when you have a key high of day and a low of day, and I want to really explain what is a good example, because a break of structure could just simply be a breakout, but it does not have to be just any breakout. It has to be the highest quality one we can find. So if you do really take a look in the situation, is this a break of structure? Technically speaking, yes, but why don't I play this, right? I see a breakout. Okay, great, we have a breakout. But breaks it, instantly back down, instantly back up, instantly back down, instantly back up. I don't like that. I want to see something like this one right here, where it's just a one candle clean breakdown, no problems from there. Does that make sense? That is the big difference. So if it breaks structure and holds above on that next candle, can it come right back down the next candle? Absolutely, anything can happen, right? Again, we're not trying to predict. We're just reacting to what's happening. So if I get a breakout and then I get a fair value gap, great. But you could have, for example, price could break this low and just shoot back up immediately in one candle. There's a lot of stuff that can happen, right? That is why you take your time with it. You look for a fair value gap, and that's it. All right. So we'll take a look at some more examples on that. Again, a breakout will be a strong candle. Yes, I know the description, not sure why it got stuck there, but essentially to give you guys the idea. All right. So if we get a break of a high with strength, notice how this candle breaks it and it's holding. It doesn't just immediately shoot back down. That is going to be a break of structure. All right. Where will we find this? Break of structure is the opposite of liquidity sweep. We will look on the lower time frame. So the 1 through 5 minute is what I use. I use the 1 through 5 minute time frame to look for these break of structures. 90% of my trades will be on the 1 minute because that is the most frequent levels that break, right? But in general, you will use the 1 through 5 minute time frame, whatever has the best possible setup. All right, guys. So before we continue, let me make sure everyone is familiar with what a break of structure is. Again, you'll have highs and lows in the market. All right. Price gets a break, a clean break, and it holds. That is going to be a break of structure. If it were to break like this and then immediately reverse back up, that is not a break of structure. That's a sweep. All right. Let me just see in the Q&A chat before we do continue. Everyone's following along. Let's see. If you guys need extra time to confirm on that one. All good. Perfect. Now let's continue into the fair value gap. So once again, a fair value gap will only be when we have a 3 candle sequence. So 1, 2, 3, I will take the first candle's high and the last candle's low, and I will mark those out. If there is a space between those candles, that is a fair value gap. All right. So essentially, you will get a fair value gap, and this is going to be the entry. All right. And I'll explain that all in a second, so don't worry. We'll cover all that. But if we get a breakout, we get a fair value gap, and price pulls back into it and it respects, that is what my model is. Is it clear? Okay. What a fair value gap basically shows you and why it works is it shows you a strong imbalance in price. So essentially, what happens is, okay, you get a breakout and buyers don't have enough time and move so fast that these buyers didn't get filled on their position. So essentially what happens is the market will never just be a straight shot up. Okay, there will be something along these lines. You'll get a breakout, you'll get a pullback, breakout, pullback, break. That's how the market moves. It doesn't just move straight up. All right. So you got to understand that. All right. Can you tell all the steps you will see before taking a trade? Yes, guys, we will get into all of that. Don't worry. We're going one by one. All right. We're going to get into everything slowly. So essentially the fair value gap is basically just when price moves too fast, all right, and does not give time for the buyers to step in. So they will wait on the next available pullback because no one is trying to enter on the highest possible candle. Is everyone clear? This is a mistake I see a lot of you guys do. You see a fair value gap and you're like, oh, what if I miss out on the trade? What if I miss out? Who cares? Okay, your job is to wait for a fair value gap pullback. Do not enter on this candle. Do not enter on this one. Do not enter on anything else. You have a very simple job. It will be when price pulls back into the fair value gap. Is that simple enough? Yes? Okay. Perfect. What about a situation where we have 2 to 3 fair value gaps? So usually, again, we'll see in the examples in a second as well, but it just depends on which one respects. Usually it's the first one that price respects. Okay. The first pullback is usually the one that we take the entry on. All right. So that's basically the main components of my strategy. Now we're going to get into the last one as well after in a second and to cover that. And then we will get on the actual live market and take a look at trades that I've taken to understand why I took it, how I took it, what's perfect, what isn't, and all those things in between. All right. So if you guys take a look at this chart, what is a fair value gap and what is not? Right here, 3 candle sequence, low and the high, connect them. If there's a space, that's a fair value gap. So this is fair value gap. All right. If you have tiny ones like this, I do not care for this one. It needs to be a decent enough size for me to actually take it. Is that clear? So that's very important as well. If you have a super tiny fair value gap, like the one where I have to like zoom in and take a look at it, I don't consider that a fair value gap. Like this is not something I play because it's so tiny. All right. If it's too large as well, again, I will not play it. If you have a fair value gap that's like, I don't know, this big, covers like this massive of space, you're not going to take that. It's just the extremes. All right. Nothing too small, nothing too big. You want to just have the average size ones. All right. This is good. This one's a little small, so I wouldn't play that. This is decent. This is decent. This is decent. Those are all fine. All right. Just as long as it's not absurdly small to the point where I take a look at it and I can't even draw it. All right. Make sense? Perfect, guys. So let's continue. This is going to be one of the most important concepts that we talk about. All right. Price action. Everything runs on price action. So what does that mean? Understanding how a candle forms, how a candle acts. All those important things are super important, guys. All right. But let's break down what a candle is. You are going to have a body of a candle and you will have a wick. All right. The wick shows you the most extreme parts of the candle. So the extreme buying and selling is going to be on the wicks. And the body kind of just shows you what direction we closed in, right? If you get a very strong wick to the downside, that indicates a lot of selling. If you get a very strong wick to the buying side, that indicates a lot of strong buying. All right, guys? So everyone understands the anatomy of a candle. You have a body, a wick. Strongest points will be on the wicks, and the body kind of indicates just the direction. All right? So make sure everyone is clear on that before we continue. Can you distinguish the model of NQ and gold because gold moves different? Yes, guys, we will cover that in a second as well. All right, we'll get into the futures. All right. So if the fair value gap forms below the breakout structure, it's on it, right? If it's below it, no, we don't play. But if it's on it, that's fine. As long as it's not like way below it, that's the only thing that we want to be careful of. Cool. So let's take a look at some more examples of price action. All right. What we want to see in the market, guys, is trends, clean follow through. All right. That is what I look for. If I have a situation where price is just breaking out highs, is breaking out lows, right? And by the way, before we continue, what is this technically called? A sweep, correct? So I don't like that. All right. I need to see follow through. So price will break out, hold a higher low. Okay. Price will break out, hold a higher low. Those things are what I look for. I want to see back-to-back candles of price actually getting follow through to either direction. That is very, very important to me. Everyone follow through on that. I don't want to take a trade wherever I see just breaks the high, fails, breaks the low, fails, breaks the high, fails. That's disgusting. Even if you get a break of structure on that, what am I going to do with that? I understand there's no follow through. All right. And this one's a little bit tricky because sure, it's in a downtrend. We can see it's in a downtrend, but what you initially see is it's making these very like weird movements to the downside. So just because it's getting a clear direction doesn't mean that you can take a setup. All right. What time frame do you use? Again, 1 through 5 minute. All right. So it's going to be essentially making lows does not mean that the setup is good. We focus on how we do on the breakouts, guys. That's the most important thing in my eyes. All right, everyone clear on that. We want this kind of price action. We don't want to see this where price is failing breakouts. All right. And lots of wicking too. That's another very important one because if what happens is if you have a bunch of wicks, so the candles might look something like this. If we go back and take a look at this, if you just have wicks and a very small body to both directions, wicks to a certain direction is good to one or the other. But if you have, just wicks to both directions, that is bad. That means that buyers cannot and sellers cannot agree on a price. We're just gonna chop around. All right. What time frame would you confirm a trend? Again, 1 through 5 minute. All right. You can use the higher time frame to basically essentially use the direction of the market, but for my model, I really just focus on the breakout and that's it. All right. If there's a breakout to the upside, it has to be a bullish for rally gap. Yes, you can play a bearish one. All right. If you're breaking to continuation, it has to be a bullish for rally gap. All right. What time frame would you confirm a trend? Again, 1 through 5 minute, guys, is going to be what we're using for the fair value gap. All right. Okay. Can you explain what is a good fair value gap that gets respected so it can enter? Yes. So we're about to get into that as well in a second. We're going to cover a bunch of trade recaps and it'll explain everything for you guys. All right. So now let's put everything together. You guys understand the individual parts of the strategy. Now let's understand what goes into it. All right. That's what I want to cover now. So you will get break a structure. All right. So that's going to be always number one. Then you will look for a fair value gap. And they both must be there. If you have a break of structure, no fair value gap, absolutely nothing. If you have a fair value gap but no break of structure, absolutely nothing. It must be all of them together. What break of structure are we using? The only break of structure I will use is the high of day, guys, and the low of day. So what that means is the levels that are from after 9:30 a.m. Eastern time, whatever the highest point that we hit and the lowest point that we hit is, that's all a break of structure for value gap is. All right? Is everyone clear on that? Okay. So this model, you put it together. Price gets a breakout. Step one done. You have a fair value gap. Okay, great. And then you enter on the fair value gap retest. If price can give you a sign that it's respecting, and I love these candles that show like a nice little tap into it and immediately reverse. Okay. What I don't want to see for fair value gap is when price comes into it, starts chopping around like this. It's showing a little bit of weakness. Okay. I'm confused. What is technically high of day and low of day, guys? So it will be the highest point that we hit and the lowest point that we hit from 9:30 a.m. Eastern time. Okay. So it will be the highest point that we hit. That's all. So after 9:30 a.m. Eastern time, what is the highest point price is tapped and what is the lowest point price is tapped? That is all. Nothing else. All right. That is all a high of day and low of day is. Okay. So if you get a breakout that's not high of day or low of day, no, I will not play it. Okay. How long will you give it to make its high of day or low of day? So initially, the way I trade this, the best quality setups will be I want to say the 10 minute. Okay, the 10-minute fair value, the 10-minute break of structure from 9:30 a.m. to 9:40 a.m. Eastern time is going to be your best one. All right. So 10 minutes, 9:30 to 9:40. And the reason for that is very simply because price is balancing out the most in the first 10 minutes of the market. So market opens, all these orders are coming in, strong candles to the highs and lows. We want to see how price settles down. Everyone clear on this? Perfect. Perfect, guys. Okay. Well, what if the first high of day and low of day fail? Do you keep marking the next high and low? So let's go back again to what I was just talking about, right? If we get something along these lines where price is just getting breaks and failing, if it does it multiple times, I don't do anything. I don't take a trade. If it just does it one time and then the second one gets followed through, that's great. That's fine, right? But it has to you have to keep your eyes on watch all the time. How are we acting at every single level that breaks? It's very important. Everyone clear on this? So the setup itself is everyone understanding how we use it. Let me just confirm in chat that everyone understands what it is. This is a 10-minute opening range breakout, basically. No, opening range breakout is just a direct breakout, right? There's no retest, there's nothing. You're playing a direct breakout. So price will break and you would enter. Get faked out a ton, which is why I add in the fair value gap retest. Okay. So very different because you can get an ORB setup every single day, but you will not get like tens of thousands of setups of break a structure fair value gap. You only get the highest quality one. All right. Perfect. If the wick along with the main body also falls into the fair value gap, yes, it just has to be that price. Usually like 3 to 5 candles maximum. Okay, it will take that much time for price to retest the fair value gap, and we'll play the continuation. So in this case, 1, 2, 3 candles, fair value gap respects. That's great. And we'll take a look at examples, guys. Don't worry. We're gonna take a look at live market examples. All right. So don't worry. We're gonna cover all that in a second. Perfect, guys. So now let's get into one of the most important things because look, I can give you the strategy and you can still mess it up. Okay. You could look at the setups and understand what you're doing, but why are you not profitable? Okay. I'm going to explain this because a lot of you struggle with this. You might have an over 50% win rate, right? And still be unprofitable. How does that happen? You see the setup in real time. Okay. Is that clear? Let me just make sure everyone has a lot of, I want to see if you guys have a situation like that. You see the setup clearly, you take it into real time, and you're still somehow unprofitable. That should be someone, I feel like a lot of people have that kind of problem. Okay. And this is where I want to really spend a little bit of time because this is what makes the big difference between a profitable trader and an unprofitable one. All right. We trade the same strategy, guys. Okay. Me and you take the same exact setup. There's two main differences. All right. I see the setup a little bit more clearly because I've been doing it for so long. I see it a lot more clearly. Number two, your risk reward is an absolute mess. All right. So that is something that I want to really cover. Every single trade that you take should never, ever, ever be more of a risk for a loss than a win. So essentially, the easy way to become profitable is to have a risk reward about like 1.5 to 2. So what that means is, doesn't matter if you're trading futures, options, whatever. Each trade should look something like this. Maximum risk should be like, let's say $300 if that's your account size, right? Maximum risk should be $300. So if you're risking a $300 stop loss, then you need at least $500 to $600 profit on that trade. Okay? You should never have a situation where, okay, you take a trade and then whatever, you take the setup and then you end up taking a $100 profit. All right? You want to stick consistently to something like this. A lot of you guys see a little bit of green and you're like, "Oh my goodness, what if I don't what if it reverses on me?" Right? And you close it, right? So you take like 8% profit or whatever it may be. You'll take like $150 profit. But the next trade comes in, and then all of a sudden you're holding that trade to Lord knows where, right? You're holding it way past your stop loss even. So that is why you're not profitable. You need to let your trade ride. I don't care if you think it's going to reverse on you. I don't care if you think, I don't know what's going to happen. You take it, you're in. It's going to hit either this or it's going to hit that. That's the only way you're going to become profitable in the beginner stage. Are we all on the same page with that one? This is where a lot of you guys struggle. You can have a literal 20% win rate and have a good risk reward and be profitable. You can have a 90% win rate and be unprofitable. It's very simple. I have a 70% win rate and I'm profitable with way more. So I give myself a little bit of room. I have about a 2.5 R. All right. This is, and when we do those Discord live streams, guys, like the actual live trading, this is what I really focus on because a lot of people take a look at what I'm trading and they're like, "Oh my goodness, we just took the same trade, but I just ended up in the loss." And I'm like, listen, the reason is you sell it too early, you do this, you do that. If you guys follow through on it actually like completely, it's very, very difficult to be unprofitable. It's very hard because it's a very basic system. That's what trading is all about. If take profit is 20% and stop loss is 20%, is that good? You can do that. That's a one-to-one. So essentially, if you have a one-to-one, you will need more than a 50% win rate to be profitable. This chart is kind of like just a quick idea of that. If you have a 2-to-1, you can be profitable with a 30%. Okay. This is where it's very, very important. Someone in chat said, we can't hear you. Can you guys hear me or no? Let me just confirm. You guys can hear me? Okay, I think that's just from the individual person. Okay. How are people taking the same trades as you and not making money? So look, every single morning, I don't know if you guys know this, we trade live, right? But what happens is I take the trade, okay, and then and I'm trusting the process. I'm like, screw this. It's gonna either hit my target or it's gonna hit my stop loss. Trade ends up running to target, but it takes a little bit of time in between and people sell. They get scared. You cannot do that. You cannot do that. When you live stream, do you tell one is a good place to trim? Absolutely. So whenever I'm live trading, it's basically, we're going to take a look at some live trades that I've done so you guys can understand, not just the charts, but understand how I take these trades in real time. All right. I don't want it to just be like, oh, he's showing it after it's happened. We're going to take a look at how everything is happening in real time. That is the most important thing. All right. How can we watch you live trade? I'll give you guys an update on that after this segment right here, okay? But I live trade in the Discord every single morning. Every trade I take will be live. Every loss I take will be live. everything will be live. Okay. So we'll cover that in a second. And I do have the recordings of that, so we'll take a look in a sec. Cool. Everyone clear on risk management, what you need to be doing? Let me just make sure in chat everyone's following along. Where's your Discord? Okay, looks like a lot of you guys are not a part of it, actually. Am I missing something? Hold on. Okay, I'll drop the link in a bit. Are there other times that the strategy can be taken? You can do Asian session too. If you're a beginner, I would not do that. I would not do that, guys. All right. So let's continue now, because risk management is super important. You can have the greatest strategy on the planet and have worst risk management. You'll be terribly unprofitable. All right. So let's take a look at some of my results from, this one's a little bit of an older one, but let's take a look at this. Why am I profitable when I take 3 trades? Come out green, right? Why do I take some trades that are, for example, 3 again, come out green? So it all does come into the same idea. If I take 2 trades and I'm green, 2 trades and I'm green, whatever, it is all going to be, all right, about risk management. Because again, we are trading the same strategy, but I'm using a very decent risk management system. Another thing, only 1 to 2 trades a day max, guys. All right. It's going to be maximum 1 to 2 trades a day. Sometimes I'll go into 3. It's very rare for me to do that. But in general, we try to stick to 1 to 2. All right. Is everyone clear on that? So now we're going to take a look at some live trade examples. Is everyone ready for that? So all the people that are asking about the Discord, we're about to take a look into that. All right. Everyone understand everything that I trade. Now we're going to break it down in the real-time markets. All righty, guys. I'm going to make sure you guys all followed along. If you didn't, we will cover that. I mean, you can go back and watch this recording later. But right now, I do want to take a look at the live trade recordings and explain everything in person. All right. So let's head over to this chat right here. Can everyone see this new screen? Let me confirm. Can everyone see this? Let me see. Awesome. So in the Discord, we do have like a whole library of all the trades that I take, right? So whenever we take a trading session, the live trading session, we upload these right there. So this is going to be essentially what we really want to cover right now. All right. So when we are taking these setups, let's really understand this. Let's go through one by one, understand. We have some options, we have some futures. We'll cover all of those specifically. So when we do trade these setups, all right, let's take a look at NVIDIA calls. And I'll mute this so we can actually figure out, can actually hear it. Give me a sec. This is from, let me just confirm the date and let me see the trade on this. Give me a second, guys. Just so we can skip directly to the entry and nothing else, all right? So it's on February 9th. That trade was taken. February 9th. Hold on, give me a second, guys. February 9th, that trade was taken at exactly. Give me one sec. Let's just see real quick. Yes, I'll be uploading this to the Discord, guys, afterwards, so you guys can go through and watch it in the same place. So this trade on NVIDIA, let's cover this real quick. So we took this trade at 6:39, so that's about 10 minutes into the market open. And let's understand why I took it. All right, so everyone can be clear on this. Let's head over into 6:39. All right.
Yeah, I don't really care.
So what do we have in this situation? This is going to be something that we want to talk about for my other way to trade it. Okay. The way we trade this setup, we have a break of structure, we have a fair value gap, and sometimes I might take my trade a little bit earlier than, the high day and low day break, but we're going to cover that in a second. All right. So what has price done here? Is everyone clear on this? Why do I like this setup so much? What is so perfect about this setup? All right. I have 1 candle, 2 candles. You see how every single candle is following through? You guys see this? Each candle is getting followed through. That's exactly what we want to take. All right. Everyone clear on this? Why I like this setup so far? Let me see. There you go. So what is the next step that I will take care of in this situation, guys? I have a fair value gap here, and I have a fair value gap here. So I will wait for price to retest any of those levels, and I will see what happens from there. Okay, so let's see. Let's take a look and see what's going on over here. Just so you guys can understand a little bit clearly. Okay. So fair value gap retest is exactly what you want. Let's see. There you go. Taps beautifully. All right. Now, what am I watching for in this exact situation to take this entry, guys? I need to see a candle that shows me that we're moving strong. Okay. So whether that be a wick, whether that be, a strong green candle just out of the fair value gap. And that's exactly what I need. Okay. So let's take a look at that. All right. So at the moment, this is live price forming. Okay. This is on the 1 minute, guys. We do not trade break of structure fair value gap on anything higher than the 5. All right. So let's see. Respect. Everyone clear on why we're looking at that?
Second try here on the video, 134 average. If it doesn't get followed through on the second one again, then I don't think anything can get followed through today.
Okay.
But retest.
You guys can hear the screen too, by the way, right?
And I do like
just to confirm.
Push to continuation on 190. Okay. So overall setup does look good.
Right. So at this point in time, guys, what I've done essentially is I've taken a fair value gap pullback. So price respected, and I take my entry. This is clear. So at that point, I get the pullback. I have the break of structure. I have everything aligning. Now I wait for price to get to my targets. All right. So let's see what happens. I'm not panicking on any red candles. I'm not doing anything. I'm just waiting for price to actually respect and play out. All righty, guys. Clear on this.
But the strength is absolutely there for sure.
All right.
Always
this is where a lot of people do go wrong, because what happens is a lot of people will see a slight little rejection and they're like, oh my goodness, what's going to happen? I'm going to sell it right now. Hits my stop loss, hits my stop loss. If it doesn't, then we are in that trade, no problem. Okay. Everyone clear on that? And then you just let it ride. Okay. It will hit your stop loss or it will hit your take profit. And essentially, what we do get on the video is, let's take a look. It's going to load in a massive, beautiful rip. All right. So this one we won't spend too much time on. I'll drop a link to the Discord. You guys can watch these videos all for free, so you can sit down and have all these timestamped and everything. Instead, now what I want to do is cover on the actual charts, so I can draw and show everything of what's good and what isn't. All right. So now let's flip over to the charts right here. Okay. Let's take a look and see how things are looking. So take a look at this Tesla chart. This is from, I believe, today, right? Sorry, no, not today. It's from Friday. Does this have any setup that looks interesting? You guys let me know. Do you guys see anything here that looks good or bad? I want to see what everyone's overall consensus is. Let me see. Everyone said trash. Now, why is this so trash? What is it about the setup that does not look good? Okay. Takes out low, complete fail. Takes out high, complete fail. All right. That's part one. All right. The second thing we want to talk about is notice how after every single green candle, you're essentially getting a massive, massive rejection right back down. This is not normal. Price will usually get followed through, but if you're getting massive rejection, immediately back up, massive rejection. Two things that I take a look at. All right. That is not going to respect, and that is not going to be a setup that I'm interested in. All right. Do you set your stop loss before entering a trade? No, you absolutely have to have a stop loss before you even take the trade. Okay. So I want to cover something here, guys. Why would I not play this break of structure for value gap, right? Why would I not take the setup? Would you look at the setup and be like, oh, it looks good, right? No. And the reason is there was no respect of the fair value gap. What was the big difference between that NVIDIA trade we just took, right? The live one, and this one? Price came into it and did absolutely nothing. It just shot right through it. I don't see anything of that. I need to see price come in, tap, respect, and then I'll take my entry. Okay. My stop loss percentage is usually going to be about 20%, usually 15 or 20%. And my targets usually will fall around like 25%, 30%. Just depends on the trade. Okay. It's not going to be strictly set for me personally, but that's exactly kind of my main idea of when I'm entering a trade. Okay. So this is a bad trade. This is not a setup you want to play. Sure, you have a breakout. Great. You have a fair value gap. Great. Did it retest and respect? No, it does absolutely nothing. Right? Also, massive wicks to both directions. That sucks. I don't want to play that trade. I take a look at it and it sucks. Okay. You already placed stop loss order before even entering. Guys, get off Robinhood. Robinhood sucks. All right. If you want to be trading, you want to get on. For options, I would recommend you guys do a prop firm on Vanquish. Vanquish is pretty cool. Or if you want to trade on your own account, do Webull and Thinkorswim. Okay. So this setup You said retest on the 5 minute fair value gap. That's the 1 minute. So let's take a look. Why would I not take a 5 minute fair value gap? And the simple answer is because there isn't one. We go on the 2 minute, just break in reverse. Okay. You go on the 3 minute, break in reverse. You go on the 5 minute, break in reverse. The only time frame that had a fair value gap there was the 1 minute. Nothing else. Correct? There's an inverse fair value gap. Why not enter? Because that is not at all what I trade. That's totally opposite of what I trade. All right. That is not my strategy. All right. So I trade just the futures ones like Nasdaq and all that. Should I switch over? I'm still on my eval. Um, it really doesn't matter what you trade, to be honest, because they all move kind of the same way. It doesn't really matter. All right. I'll show you some futures examples in a second too. So let's actually move over to that. Now MNQ. Let's come over to this one. Is this setup decent? Do you guys see what I'm looking at over here? So price, why would I not play this fair value gap right here? Let's actually dissect every single one of these trades. We have a strong breakdown, correct? We have a fair value gap, right? Is everyone clear on that? But this fair value gap, remember we talked about when it's like a super tiny one like this where I have to like draw it out like this. I don't play that. It should be decent size. You should look at it, and if it's one that's extremely difficult to kind of like notice, then I'm not even going to focus on that because that's not really a decent fair value gap. All right. Now, next time around, why don't I take a trade off this fair value gap? Because massive green candle, immediately back down, breaks the low, immediately back up, breaks the high. So it's chopping around right here. So at this point, I am not interested in the setup. All right. What I take a look at on the next one, okay. Someone said I trade futures, would love to join the Discord premium, but did not because you trade options. I actually trade a lot of futures too. Futures is my secondary thing. So I trade a lot of futures as well, usually about 3 times a week, sometimes more. But yes, I do futures as well and options. So let's really dissect everything here. Why do I get interested all of a sudden on the setup here? All right. You have the breakdown, but notice how the candles are moving. One candle, two, three, four, five, six, seven red candles in a row. All right. You have 6 red candles in a row, and they're all respecting. They're not doing the same thing that was going on over here, where price would break, immediately shoot back up. We don't do that. It just immediately moves beautifully. Okay. Can we have a discount to be in the Discord? Yes, I will get you guys that at the end of the. Actually, I'll give you guys as like a gift. We have that planned out to get you guys into the server. Okay. So, why do I take this trade? Break of structure is right there. Fair value gap is right there, right here. Okay. And to go back to that question we were talking about, why not take multiple fair value gaps? All right. How do I know which one to take the entry off of? The first one taps into it. If it respects, I'll take that trade. One of my favorite setups, and I'm actually going to show you guys this here in a second. If I can get this off my screen, there we go. I want to see one of 3 things for my candle. Okay, when price taps the fair value gap, how do I know? It will either be a strong green candle like this one we just saw on the video that we were just talking about. Okay, so let's take a look at that. I want to either see a strong green candle. This is the best sign that the price is respecting. All right. The second one, all right, is going to be a wick. So the candle opens initially red and then it flips to green. Or in this case, it opens initially green and flips to red. Make sense? So in this case, what I saw was price got that beautiful candle flip where it initially opened green and then flipped red after testing the fair value gap. And that is why I took that trade. Makes sense, guys. All right. And the third one, which is another one we're about to discuss in a sec, is going to be when price does not completely flip to red, but it does get a very strong wick. Alrighty. Everyone clear on this? So let's take a look at a few more examples. Right here on Amazon, we took out the initial low. Absolutely nothing happens. Okay? Absolutely nothing. So this is not of interest. Takes out the high, and now we actually get follow through. Notice 1, 2, 3, 4, 5, 6, 7, 8 candles in a row of green, like tons of them. So now I take a look. I have my break of structure. I wait for the fair value gap. And that is going to be what decides if I enter that trade or if I don't. All right. So let's see what happens on Amazon. Taps into the fair value gap and it gets a red to green flip. Do you guys see this? That is what I love to see. All right. That's exactly what I love to see. So that is a trade that I'll take because everything is aligning. Let's really break this down one more time. You must have a break of structure of a high of or low of day. You must have a fair value gap after that break, and then you must have price respect that fair value gap. All right. Everyone following along with this? Let me just make sure in chat. I really like the way you're teaching us. Can I copy trade with your account? So I don't do copy trading. The closest thing I have is the live trading where you can basically see all my trades like live with screen share and all that. But I don't do like direct account copy trading. Okay. All right, everybody. So you take that trade. The reason why it ends up getting follow through is simply due to the fact that we actually respected the fair value gap breakout. All right. What about the fair value gap on 207? What's 207? Where are you seeing? Right here? This one? Yeah, guys, always remember it must be a break of structure, a fair value gap after that break of structure, and that is the only time we'll take the setup. I don't trade any other strategies. Like, I don't really, if there's an inverse fair value gap, it means nothing to me because that's not my strategy, right? If there's I don't know, something else, doesn't mean anything to me. All right. Can you show your fair value gap zoomed one more time? Yes. Let's go into it and take a look at a specific idea. Taps into it, candle opens initially red, and then it flips to green. All right. So what that indicates to me is we could not hold the red candle at all. Okay. That is not holding. That is not respecting at all, right? If price can actually tap into it and flip, that means that the buyers, boom, they're strong. They're ready to go. Is that clear? Alrighty. Why don't you use liquidity sweep plus inverse for value gap anymore? I mean, I used to have that as like a secondary strategy, but it's just not something that I really find to be better than what I currently trade. All right. You have the volume profile on the right. I really just have that as a habit, to be honest, guys. I don't really use the volume profile for anything in specific. I just had it on my charts back then. It's kind of just stuck with me. How did you find that fair value gap? It's on the screen. Like it's when after the breakout, I just look, where's the fair value gap? We have two of them right here and right here. Whichever one price taps into and respects, usually it's the first one. Okay. That is when I take the entry. Now people are asking, where do you enter in this point? So you have two ways of entering. You can either enter mid candle, but it's 1,000 times riskier to do that. Or you can enter after the candle closes, but you will also get a little bit of a higher entry. I personally, if I see the price action is insanely strong like it is in this case on Amazon, I will take it mid candle. Okay. Can you repeat the three signs that is being respected? Yes. It's going to be, let me get this off my screen. I can't. Hold on. There we go. It's going to be either a strong green candle out of the fair value gap, like this one on the video. It will either be a beautiful green to red flip or red to green flip, like this one right here on Amazon. Or it will be something like PLTR, which is the weakest one of them. All right, like this, for example. Let's actually take a look at this example while we're at it. You have a break of structure, you have a fair value gap, and price taps into it and wicks back down very hard. That is a good sign that price is respecting. Okay, so we keep going. Price ends up getting the follow through to the downside. But what indicates to me on all of these trades that it's good, right? And why did I not take, for example, let's take a look at one that we don't take, Tesla. Let's go back to that. Let's get that off my screen. Give me a sec. There we go. Hold on. Can't see. There's the zoom thing that's blocking this. There we go. Why would I not take this one on Tesla, guys? Because absolutely nothing happens. It just busts right through it. Correct? That means nothing to me. All right. Do I always enter using market orders? Yes, I do market orders. I don't really deal with a lot of spread because the contracts are usually very tight. So it's all pretty good. All right. What's your winning percentage? Usually 60 to 70%. Sometimes some months is much higher, but some months that's it. I get intimidated by the opposing fair value gap. Once everything is aligned, just ignore it. Forget everything, guys. Forget everything absolutely. You want to just focus on what your setup is. Now, there's 5 million different things you can take a look at and scare yourself away from a trade. Who cares? All right. That stuff means nothing to you. All right. You have your setup. That's all you will trade. All right. If there's 20 fair value gaps, I don't know, whatever's going on. Who cares? That's all. Okay. When you enter with your strategy, do you look for draw and liquidity as your targets? Yes. So you'll see, for example, in the Discord, whenever I have the live trade recordings, when I upload them, all of those, every single one of those ones, I always talk about draw and liquidity. Your price is attracted to this level. That's why I use liquidity. That's why I talked about it earlier in the class, right? That's mainly to give me an idea. All right. Everyone clear on this? All right. All right. Perfect. Can we get the Discord link to join in and see the Live trade recordings. Yes. Let me send that to you guys. You guys can go in and check in over there too. Hold on. This is the link. Hold on. Give me a second. You guys can go in and it's a really good thing because I want you guys to understand how the market moves in real time compared to just like, oh, we did this. Okay, great. But seeing it totally live is a totally different game. All right. Sounds good. So the link is going to be this. So you guys can just type it into the browser. We'll get you guys full access into it. All right. Right there. So this is the link to the server. You guys can watch all those live trade recordings all over there. Just to give you an idea of how it looks, you'll go into, where is it? You'll go into the channel, you'll go into live trade recordings, and you will see every single video that we have right here. It'll cover futures, options, whatever you guys are confused on. You can go back and watch all of those. All right. We have all that set. So that'll be there to explain all of it. Okay. And that is also where I do live trade. Now, a few of you guys asked me, should we, a lot of people are asking for a discount code, and I promised you guys in chat that I would give you guys a discount code. So if you guys do want to watch the live trading sessions as they happen every single morning, in the Discord, put code webinar. It will give you 30% off on your first month, so you guys can actually come in and watch me live trade. All right. Makes sense, everybody? Just because you guys stuck around with me for about an hour, get you guys a little gift. All righty. Perfect, guys. Perfect. So let me see in the chat. Did everyone learn something today? Did everyone really understand everything clearly? Let me see. I hopefully can get everything. Can I get the link to the Discord? I'm not able to type it in the chat anywhere, but go to discord.gg/platinum, or if you go to my Instagram or anywhere, you'll see it there too. And the code is webinar. Just type in webinar, it'll give you guys a discount. All right. 30% off. I think live trading is going to be the best way to kind of get everything too. It's pretty beneficial in my opinion. So even if you guys just want to join it for a month and just kind of see how everything works, or if you don't want to join in, you want to watch the live trade recordings, you can absolutely do that too. Perfect, everybody. Perfect. So I really hope everybody enjoyed this class. Again, I want to make sure everyone learned something, that I explained everything perfectly. All right. Let me make sure. Just a quick little yes in chat. Let's see. Perfect, guys. I love that. I absolutely love that. Let me see if I can turn on chat. Hold on, give me a second. Q&A, enable names, share computer. How can I enable chat? So everyone can ask questions. That's weird. Yeah. For people asking what the code word, let me get back to that here. Hold on. But yeah, everybody. So essentially, I want to take this time to really cover everything because a lot of you guys do follow my trades and everything like that. And I want you guys to really understand how everything works. And the people that were asking, once again, thank you guys for joining in. All right. And again, this is your little gift for all the people that are asking me in chat. You guys have been asking me since like last 2 weeks in the Discord chat. You guys can absolutely use that as a little gift, all right? So every single morning we will be live trading the strategy. That does give you guys the best possible way to learn. It crushes it because again, it's something for me to tell you guys, oh, I did this, I did that. Seeing me do it live is a totally different game. So again, you can watch the live trade recordings, you can watch the live streams, whatever you want to. That's going to be the best thing, all right? So yeah, take advantage of that, and we'll be back tomorrow morning live trading. So you guys can join in for that session and everything will be good, all right? Does your strategy always present itself in NQ? So again, let me also go back to my futures strategy as well too. Hold on. If you guys are not able to get into the Discord, I'll send you guys an email or text afterwards too. You guys can probably just get it from there. So I do trade futures too. It looks essentially similar, the same strategy that we do trade. So the way I trade futures, guys, for those of you that are asking, can you do futures too? Yes. Same idea. Same exact strategy, nothing different. It's very, very simple. I mean, it works across all boards, everything. All right. That's essentially how my strategy works on futures too. Do I live trade on Zoom or Discord? I do it on Discord. So yeah, I do everything. Futures, options, I trade all of it, guys. So we'll be back tomorrow morning. We'll be trading that. For those of you that are already in the Discord, obviously you guys can be there. All right. Can't trade in New York. What time is Asia? Asia is usually 4 to, or that'll be 7 to 8 p.m. Eastern time. Okay. How'd you grow your account so quickly with risk management like that? So the way I trade is a little bit different. I usually, if I see a trade is going to respect, it's respecting very well, it's strong, I will let it ride a little bit more. But for newer traders, that is not something you want to do because that will end up kind of screwing you over. All right. If you don't know how to properly use highs and lows, then we don't do that. Do I trade more MNQ than MES? Absolutely. I love MNQ the most. That's what I've gotten most of my payouts on. Also, what I've passed a lot of my accounts on. Um, but yeah, essentially, I do trade MNQ most of the time or MGC. All right. Why do you scale if you can end up with a one-to-one R? Again, that is something that's much more advanced, so I don't scale unless I'm confirmed that everything is respecting beautifully on that. All right. Perfect, everybody. So, once again, guys, I hope everybody really enjoyed this class. Everybody learned something. I wanted to take some time and really cover all this. And we will be back again tomorrow morning live trading in the Discord. So if you guys are in there, feel free to use that code that I put up. You guys can get a discount. I usually don't do discounts, but you guys are all asking me in chat. So I was like, all right, let's do it. But yeah, so we'll be trading live tomorrow morning, everybody. And I will also send you guys, if you don't have the link right now, I'll send you guys a text or an email afterwards to get you guys the Discord. All right. For those of you guys that are not in there yet. Perfect, everybody. Thank you guys so much for joining in. It was a great time. It was great to have you guys here. I'm glad everybody was able to learn. And I will also be uploading this recording as well in the Discord too. So it'll be in there under the same like live trade recording session. Okay. Perfect, everybody. Take care. Enjoy the rest of your day, night, wherever you guys are. And thank you so much for joining in. We'll be doing more of these guys. So it'll really help you guys out a ton. All right. Take care, team. Everyone enjoy the rest of your day. Thank you guys for joining in once again. All right. See you all. Okay. Take care, guys.